So his current advisor charging him $80,000 a year. And then before meeting with us, he actually met with another advisor that quoted him at $300,000 for his portfolio. All right, so why don't you tell everyone why you're wearing a black shirt today?
That's a great question. So this is my Johnny Cash luck. So today I'm going to be the bad guy, right? And hopefully I'm going to spread some good in the process of doing it. But, we just had a potential client come in the office this week. And honestly, what we saw from a standpoint of what they were getting quoted in fees was it was like night and day. Like, I just don't understand the disparity in fees that this guy was being charged or going to be charged or we were proposing charging to them. And it just really ticks me off. So today we're going to talk about advisor fees, and full disclosure, we're going to be biased today. All right. So we're going to try to kind of even things out and provide some fair balance. But this is our professional opinion. This is not financial advice.
So let's actually talk a little bit about this prospective client example that came in. So this person came to us, ultra high net worth client. He had a $36 million portfolio. So the reason that he left his firm was not necessarily because he didn't like the service of the firm that he was currently at.
Right. He didn't leave yet.
He didn't leave yet.
Right.
But the idea for him was, well, I'm paying $80,000 a year to this firm, and I don't feel like the service is worth $80,000. Right. So his current advisor charging him $80,000 a year. And then before meeting with us, he actually met with another advisor that quoted him at $300,000 for his portfolio.
And that right there is just a stark difference. I mean, the services that he was looking for from all the advisors that he's interviewed is the same set of services, right? So, and we'll talk about that in a second, but it's the same services. And how could you be paying $80,000 and get quoted $300,000 for the same service? I mean, it's the difference between a Lexus and a Ferrari. I just every year. Yeah. It's just crazy.
And the crazy part is, and this is kind of going to the industry side of the rant. That's kind of industry standard. I mean, these were fees that ranged between 0.5% of the portfolio and 1% of the portfolio, if not slightly over 1% of the portfolio. And the difference in fees was dramatic.
Right.
Huge.
Well, so if you're thinking about this as well, that's more than, 1% of 36 million is 360,000 or 180,000. Well, as it turns out, only about half of his portfolio needed to be managed. I mean, the other half needed to be monitored, but it was pretty static.
Yeah.
Right. So we're not going to get into the reasons why, but it was really about somewhere between 14 to 16 million that actually had to be managed to any significant extent.
Yeah, and then so going off of that, this $36 million person was not overly complex, right? As far as $36 million clients go, his investments, the other half wasn't very sophisticated. It was, stocks and bonds, but it's not like he was going into private equity or certain real estate types of investments. It was a pretty straightforward portfolio.
Yeah, well, he wasn't looking for a lot of alternative investments. Yeah. He wasn't looking for anything that was honestly beyond what we saw in the portfolio that a client with, 3.6 million would have, let alone 36 million. So based off of the complexity of the assets and the complexity of the plan itself, we quoted him 30,000. So the question is what?
Well, the question is, if you're going to get the same set of services at all three of the different places that we mentioned so far, why would you pay 3 to 10 times more for the same level of service?
Yeah, and I don't want this to sound like us versus them. All right, the point is that the flat fee advisor charges a flat fee, right? It doesn't have to do with whether he was had 18 million to manage or 36 million to manage. The question is what services is the advisor providing? And look, we do realize that when someone has 36 million compared to 3.6 million, that the planning itself overall is more complex. And our fee represents that. Any flat advisor's fee should represent that. But to me, I mean, the difference between a $30,000 fee and $80,000 fee and unbelievably a Ferrari-like $300,000 fee, when each advisor is providing essentially the same services, something's amiss, right?
And that's where we kind of have talked about this in previous videos. It's like a wealth tax. It's like, why are you paying more? If you have 5 million, 10 million, 36 million, if the level of complexity is the same and service is the same, why does it cost more at all those different levels? So a common question to this massive difference in fees could be, and this is actually what the prospective client's advisor kind of said to him, is, well, you get what you pay for. If you're paying $36,000 versus $300,000, obviously the $300,000 service is going to be extremely premium. And I think we would say, well, they better be flying you on private jets to go to their meetings. But
yeah, that's the I think they call it the emperor's new clothes, right? So you think that you're buying something that's really not even there. The services of an advisor are really irrespective of their fee when it comes to an AUM fee, right? So if you charge 1% and another advisor charges 0.5%, they're not necessarily one is half as good as the other. All they're doing though is they're charging you a fee based off of your assets. So they're not charging you a fee for financial planning, they're incorporating into the assets. But if everything stays static, if they manage the portfolio the same way, if they do the same tax strategy, if they do the same financial planning, if they do the same estate planning each year, then why does their fee vary? It doesn't make sense.
so then the other side of it is, does the $300,000 firm have better quality technology than the $80,000 or the $30,000 firm, the flat fee firm? And we would say probably not. So then if the services are the same, the technology quality and the quality of recommendations are similar or the same, but the fee, again, is 3 to 10 times less than what you would pay at one of those more expensive firms, why would you go with the AUM expensive model in this example that we're talking about compared to the flat fee?
Are you asking me?
Yeah.
All right. Well, so I'll give the fair balance end of it, right? So in some cases, an AUM fee makes sense. It should make sense from a standpoint of what you're paying to the size of your portfolio that's being managed, including the other services that you're getting. So if you're getting, if you're paying a little bit more from a flat fee advisor than you would through an AUM advisor, but you're getting better tax planning and you're getting better insurance planning, and you're getting better financial planning and all that, then maybe the fee is worth it. But at one point in time, if you've got $500,000, a $15,000 fee just doesn't work.
Yeah,
right?
Exactly.
So that's one. Two is, if you're only getting investment management and your advisor is doing very sophisticated strategies, so they're almost operating like a hedge fund, they're doing sophisticated option strategies, so they're doing things that traditional advisors don't offer. They've got a specialized program. Then maybe paying an asset management fee for that portion of the portfolio makes sense, because the strategies are designed to do something special, and it is designed to try to do something that's different than the traditional market. Right?
And that probably goes and ties along with people who want their advisor's performance to be tied to their investment.
We've had people in the past that have come to us that are in sales jobs, right? And they like the idea of an advisor's compensation being tied to the swings of the market. The idea is it's not that you should pay the cheapest, right? The idea is that you should pay a reasonable, fair price for the service that you're getting, right? And our feeling is that doesn't come out to a percentage. It comes out to looking and saying, okay, well, at the end of the day, am I going to get more value than the fee that I paid? So again, this is our rant. It's our personal opinions, right? We're trying to give some fair balance to this. We're going to put a link down in the bottom of this video in the description to our ADV, which is the regulatory document that we file, which discloses everything about our services and our fees. So feel free to take a look at that. It's public information, and compare that to other advisors. Appreciate you watching the video, putting up with us for this rant.
If you like this video, leave a like and leave a comment down below what you think of flat fee versus AUM. And if you want to see another video on this, let us know, and we'll see you in the next one.